Okay, we are in live stream. Hey, good afternoon, Samantha.
Good afternoon, Dad. How are you doing today?
I'm doing good, and welcome everyone to this week's Happy Half Hour. Sam, tell them about us. Who are we? Just in case somebody new has stumbled into this humble little the webcast.
Absolutely. Well, we are Carolina retirement planners, and every day at 4:30, or every Thursday at 4:30, we meet here to talk about some kind of financial topic and to enjoy a little virtual community gathering.
How many weeks have we been doing this now?
I don't know. You always want to know how many weeks we've done
Amy,
this.
do you know how many weeks we've been doing this?
Almost 60.
I do.
Right?
This is number 57.
50. Amy, by the way, is behind the scenes there. She is the one that actually makes this all work. We're actually recording this, kind of doing it over Zoom and feeding it into Facebook and later getting it up on YouTube. So, it's no small.
I need to do an apology to everybody that sent in an email today. I did not have a chance to reply to everybody's email, but I do want to assure everybody that I have your names and all of your questions and all your answers, and I gave them to Sam. And I'm so sorry. I don't think I've done that before. And
if you're new, you know that if if you submit a question, you'll be entered into the wine drawing at the end of this. Now there's a few things we're gonna just chat for a little while because today's presentation could be a little long. So but there's a couple things we do that's traditional. One is we ask everybody what you are. First, we ask people to come and type into the chat that you're here. Say hi, because we don't know you're here unless you type it in. We also ask, if you want to tell us what you're drinking. What are you drinking today, Sam?
Oh, today, Neil, my husband, Neil, who is a brewer at Waterline Brewing, brought me back a Neil IPA. They have made an IPA and named it affectionately after my husband. So I'm drinking the Neil IPA today.
He made it, and in his honor, they named it after him. And I am drinking my normal herbal tea because I found that if I drink something it's by the end of the happy half hour, I may be just too happy. And Amy, are you drinking anything special today?
Water out of my babcha. Nothing exciting. Of a day, water.
And I see we already have Miranda has said hi, Teresa and Nadine, 3 great regulars. With the other thing we always ask is what day is today? Every day somebody has apparently named pretty much every day of the year. What is today, Amy? What's special about today?
Well, I had a nice email all ready to go out, but it didn't happen. Today is National Root Beer Float Day. So we don't have an A&W restaurant here, but if we had an A&W restaurant, you could go get a free root beer float.
I think the last one I've seen was in Manhattan, right in the middle of Broadway. With all the fairs. Isn't there an A&W there? I think there is. Anyway.
I am not a huge root beer fan. I think maybe if I had like a really homemade, amazing, I don't know, maybe I haven't had the right root beer, but back whenever I was in college, working my way through college, waiting tables, I used to make Dr. Pepper floats. And I really enjoyed it. Yeah. So
it probably depends upon whether you're getting the right spice from root beer or an artificial one.
I think I've
more sassafras.
Yeah, I'm not a huge soda person, but I did once have like a homemade at a festival once. They had like a homemade black cherry soda that they poured over, it was like hand chipped ice in this tin, and that I really enjoy a nice homemade.
We all know that Sam prefers her bubbles in her beer,
I prefer my bubbles and my champagne.
Or champagne.
I was just
testify
gonna
to
say that. I was like, no, the champagne, the champagne.
Okay, we also have Ed has joined us,
Hey, Ed,
and Michael is here. He is
drinking
having
scotch
on the rocks.
Very nice.
And Patricia is here. Brent, welcome. And Brent is up in Maine right now, where hopefully it's cooler than it is here. Although today's not too oppressive a day. Jim, good to hear from you. And I think there is Teresa again. So what is our topic today, Sam?
Ooh, today I'm wearing some things, some jewelry specifically for the occasion. We are going to be talking about gold.
Gold, huh?
Gold, the importance of gold in your portfolio and as an asset class. Where did it come from? Why is it important? Why might you want it? Gold.
Yeah, this is kind of a fun look at gold because and with any luck, everybody is now seeing my screen. Does that seem right to you?
Yes, I
okay.
do. I see your screen.
Okay, so we're going to talk about gold. A lot of times folks say, should I buy gold? How much should I buy? We got all those folks on television and AM radio that are telling us if we only buy gold, we'll all be rich. We got to have, and that's the secret to success. And it can be kind of hard to fathom what exactly the truth is. So we're going to kind of look at gold today. And I want to start, one of the things I did is I said, well, if gold's going to make me rich, let me go look at how gold has done versus, maybe versus the stock market here. Okay. So what I have here on the screen is, this is 2011 down here. This is in fact, I believe August 5th of 2011, and this is today. If you look at this, the stock market here is up 260% over those 10 years. Gold started here, ended here, and gold is down -5%. So for what it's worth, if I look at gold over the last 10 years, seems like the stock market beat it handsomely. In fact, it basically didn't make any money. But we can also look at it over to other time periods. If I go back about 5 years before this, and I look at it from 2005 to 2010, those 5 years, well, the stock market was down about 6% and gold was up 181. So it kind of looks at like your time period, but it certainly isn't like gold at all times, or even over a long period of time, is going to keep track of the market. In fact, we're going to see some even more interesting things there when it comes to gold. Now, one of the things I did is I went back even further and I looked, and by the way, let me start by saying, just to qualify, this is meant to be sort of an entertaining look at gold. It is in no way, shape, or form meant to be advice for what you should do going out and buying gold. It's kind of looking at some information in an entertaining fashion, but don't construe this as, and you want to go to your licensed financial advisor and look at everything. So anyway, for that said, this is one chart I found on the web. They seem to keep up to
Hey,
date.
Dad, what's a troy ounce?
That's a good question. you know, I wish you wouldn't ask me questions I don't instantly know the answer to, you know?
Maybe it's one of the ways that they define gold. And I'll Google it while you're talking.
You can Google it while I'm looking. This is the price of gold. And by the way, the red line is the inflation adjusted price of gold, and the black line is the actual price of gold. You see a couple.
Time out. A troy ounce is a unit of measure used for weighing precious metals that dates back to the Middle Ages. Originally used in Troyes, France, 1 troy ounce is equal to 31.1, a lot of digits after that, grams, according to the UK Royal Mint. All right,
Okay.
you may continue.
So
I know everyone was waiting with bated breath for the
31.1 grams of gold. And so if I take 31 and I multiply it, how many grams in it? Never mind, I won't go there. So anyway, here is the you look at this, you see some patterns. One interesting thing is if we go to 1980, we had this big spike here in the price of gold. Why did gold? Does anybody out there remember what happened in 1980 in the precious metals market? If you know, that was what, 40 years ago. That was, those of you who go back that far may remember the Hunt brothers. That was when the Hunt brothers were trying to corner the silver market, and they were manipulating the price of silver to make a lot of money. And it also spilled over into the price of gold. So you see, we had this big spike where it went up to, you know, over $2,000 a troy ounce. And gosh, by 20 years later, it had fallen down to 1/5 that price. And you can see there were even more spikes in between. We had another spike here in what looks like 2013 or so. You can look at this graph over the long run and say, boy, I can't count on gold being a great investment over the long run. Look at the ups and downs. Boy, if I bought it at one of these spikes, I'd be kicking myself now. It also likens that there's a saying that if you go into a poker game with some folks you don't know, and if in the first 5 or 10 minutes you haven't figured out who the patsy is, you're the patsy, you know. So I sometimes think about that's the way in investing in the gold market. So it's kind of the long-term price of gold. You can see the ups and downs. When people say, will gold make me money? I often say, go Google this, you'll understand it. Who knows? Now, that brings me to this book. This book was published. This is the first time it was published. It was 1978. It was a guy named Andrew Tobias, The Only Investment Guide You'll Ever Need. Now, Sam, what is special about 1978? Do you know what's special about 1978?
I don't know. It couldn't have been that special. I wasn't around yet.
I guess not. I guess not. It was a special year for me.
Well, for you, I think that's when you graduated from Cornell, right?
That's right. In 1978, I graduated from Cornell, degree in engineering.
Did you leave with this handy pocket guide?
I had my little pocket protector, and I was, and arguably, or, you know, for all intents and purposes, am still pretty nerdy. But I went down and I worked for Corning. I went down to Corning, got a little apartment in a little town called Addison, New York, and in fact, I had a mattress on the floor. I just had a mattress on the floor until I met your mother. I didn't see any real reason to get a bed. You know, it just didn't seem logical when you could put it. And I remember sitting there on that mattress and reading this book. Andrew Tobias has several versions of it since then, but this is his first one. And in that, he said, you should put 5% of your money into gold And he said, that's because if there's hyperinflation, it will say, that gold will be worth a lot. Okay. 5% of your money into gold. And that always kind of stuck in my mind, Now let's fast forward to.
I just realized that their arms are the stock market. Will you go back for a second? Just real quick. I just noticed that if you look at their arms, isn't that like the ups and downs of
That's like the ups. It's like a stock market graph. That's right.
I was too busy looking at their noses converging in the money sign. I didn't realize.
And just so you know, I went and actually found this edition back in. I went to Amazon and bought it used because this is to find this original edition. So let's fast forward here to 2011, about 10 years ago. I remember I was doing a presentation on gold. I was giving it, I don't know, was it I was giving it a workshop at UNCW, I think, and it turned out, universities are really well known for having well-managed endowments. In fact, I'm trying to get a gentleman on. He might be here next week. We're working on it, or where, they talk about how universities invest. Of course, the biggest endowment in the country is Harvard. They have the biggest pot, but the second biggest pot is the University of Texas. They've got about $20 billion in their pot. And in 2011, they were saying how they put basically 1 billion of this 20 into gold. And they actually had it stored. And now they didn't buy GLD, they didn't buy a gold stock or a gold ETF. They actually bought physical bullion, and it was stored in the basement, in a basement vault in New York City. And they did that as a hedge against currencies. That was the reason for doing it, which is another way to say a market crash or hyperinflation. Well, guess what? 20 billion, 1 billion divided by 20 billion is 5%. So Texas has put 5% of their money into gold bullion to basically protect it against crazy market currency fluctuations. It gets even more interesting. About 2 years ago, this is right off their website, Texas formed its own bullion depository located in Texas, on Texas soil, and they moved that $1 billion in bullion from New York City to Texas to have it there. Kind of interesting. If there's a major currency collapse and craziness, Texas has their gold close at hand, and they actually have enough room in this. They actually have enough room in this depository to put another 99 billion for their own, people that in Texas that want to store their own gold there. So I found that kind of interesting. Not only did they put 5% of these well-managed smart portfolios put 5% in the gold bullion, but they even brought it to Texas where it would be safe. So
I don't know, Dad. I think we could get in there.
Oh yeah, you could. You're gonna go. You've been watching too many of those. Okay, so let's look at let's take an even longer view of gold. And I see, I miss this guy. Do you remember his name, Sam?
Jeremy Siegel.
Jeremy Siegel. And he wrote a book on long-term investing. He is a professor at Wharton, and he's on TV all the time. He's one of those experts they go to. You remember where we saw him ourselves?
Yeah, we saw him in Chicago.
Yeah,
at a wealth training at a.
Hey, that's my hometown. That's where I'm from.
That's right. It was
about 2 years ago today.
Yeah, before we shut down for COVID, 2 years ago in August, we went and saw him, and he's got a lot of interesting data. And this is some of his data for what indexes has done. He said if you put $1 in 1802, if you put $1 into these things, what it would be worth. Well, if you put $1 into stocks, it would be worth about $1.4 million today.
Wow.
And if you put $1 into bonds, it'd be worth about $1,735. And if you put it into treasury bills, it'd be worth about $265. But this is interesting. If I put $1 into gold back then, it would now be worth about $3.42. I mean, look at this. Over this whole time, gold barely moved. Now, here is some questions for people in the audience. There were, if you look here closely, you can see that in 1913, in 1913, there was a drop. In 1933 or 34, there was an increase, and it really took off in 1971. We had big changes in gold. If you know what one of those dates are, go ahead and type it into the comments, and Brent and Amy will pass it on to us. And while we're doing that, let's see, we have some more people have joined us. I think we said hi to Brent. Jim's here. Dan and Barb are drinking gin and tonics, probably in the mountains.
So Ed says the depression.
Yeah, but that's not what caused it. We got Jay and Carter are here.
We have
And,
Rocky,
Rich,
Judy,
Ellen, Brent, Jim,
Miranda,
Jeff.
and Rich.
1913, 1934, 1971, things happened that upset the price of gold. Any other guesses there?
Not yet.
Okay, I'm going to move on because 1913 is when we created the Federal Reserve. Okay, 1913 was the Federal Reserve. In 1934, we basically confiscated all the gold. And when the only thing left were gold coins minted 1933 or before. So that we said all the gold has to be held by the government, not in private hands. And in 1971 was what's known as the Nixon Shock. Prior to 1971, prior to 1971, a country at least could come to us with gold, with dollar bills, and we would reimburse them in gold. And I think in 1934 too, we changed the price of gold from $20 an ounce to 35. So we devalued the dollar. But those were the big things. After 1971, we basically went off the gold standard. And some, so things change. The other really interesting thing here is he also calculated not just what these are worth, but he calculated what the dollar here was worth over that time period. And look at that, up till the time when we essentially went off the gold standard, up to 1934, the dollar really retained its value. A loaf of bread in 1802 and a loaf of bread in 1913, rather, was about the same. There was no inflation during that time period, no significant inflation. People think inflation has always been with us, it's natural. We did not have inflation until we created the Federal Reserve and arguably could begin to print money. Now, we had a lot of crazy ups and downs in our economy and everything else but that's an interesting point. And now a dollar is worth 47 cents compared to where it was then. So sometime we got to do one on inflation and what all this means. But, you know, gold kept us pegged in the 1800s. We built a pretty good country on the gold standard. Now, when it comes to investing in gold, there's two, this is kind of my opinion or my view. There's two ways to invest in gold. One of them is, or two reasons. One of them is you say, look, I'm gonna speculate. I'm gonna realize that it's going up and down, and I'm gonna buy it as just like I would a stock that goes up and down. The other reason to buy it is something that I like to call parachute gold. You know, if you're in a plane and the engine stops, all the engines crap out, the person who jumps out with a parachute is probably going to land more comfortably than those that don't have a parachute. And
I would imagine so.
Yeah, it's like pretty logical, right? Well, this is
Miranda says another day, another 47 cents.
This is why Andrew Tobias in the state of Texas is putting money in the gold bullion. So that if by chance we do have hyperinflation and a currency collapse, I don't know. I mean, it's very rare. It's only caused by things like running up a huge national debt. But if that happened and you had gold, that gold would inflate in value and kind of save you. Now, if you're into, there's two ways to buy gold. One is you can buy an ETF like GLD. And theoretically, at least, it's supposed to be backed by gold in Europe. But there's been, when I research it, people are kind of saying funny things about that. But you can't go take your GLD on your statement and go get gold for it. You kind of own this this ETF that may be backed by gold. If the currency collapsed, this probably wouldn't save you. But you could use that to invest and play the market ups and downs. And some of the strategies we use, this is one called Milliman. It uses gold. We have one called Smart Veda. It uses gold. They'll use a little bit of gold to adjust constantly to kind of compensate for market ups and downs. This is, I just went and looked over a period of time for how Milliman invest in gold, and you can see they varied from 25% gold here in 2018 and about 20% here when the market crashed last year. There was a crash at the end of 2018 down to almost no gold last year. So there you see they want software that's sophisticated software to tell them how to move around with gold, and you can see the big fluctuations. Not many people are smart enough to do this on their own. If you really want parachute gold, you want to buy real gold. You want to protect yourself against the time when, this is the Weimar Republic between World War I and World War II, where the money became worthless and people were building kites out of it, burning it for fuel, playing with it as toys. You know, this is where the people that had gold made out. The most recent version of this is Zimbabwe. This is the third Zimbabwe dollar. In August of 2008, you could 1,780 Zimbabwe dollars would buy you $1 US. By October, it took 2.3 million Zimbabwe dollars to buy you a US dollar. And by November of 2008, it took 669 billion Zimbabwe dollars to buy you a US dollar, which is,
whoa, that's within the course of just a few months. That's not even 6 months.
That's right. And this sign I found interesting. You know, this is toilet paper only, no cardboard, no cloth, no Zim dollars. You know, this is how worthless they became. So this is why you buy parachute gold. one last little bit of wisdom. If you do buy gold, there's a lot of ways to buy it. A lot of people are pushing old coins. If you have coins before 1933 and you buy them, you don't have to report it because you're exchanging currency. And a lot of folks try to tell you that that's what you want to do so the government can't trace you, but they usually charge way too much for them. And so be very careful if you're doing that. New gold, you know, you can buy that in coins, in little ingots, big ingots. You got to be careful who you buy new gold from. We have some sources that we bring people to that we've worked with for years that we can trust, but it's tricky there. And if you do buy it, you probably want to put it, you know, you can put it in a safe deposit box, but a lot of people say, no, I want it close at hand, like Texas, and I'm gonna put it in a safe in my house, where you can even buy canisters where you can bury it in your backyard. So that's a kind of an overview. Here's the little executive order from 1934 that said anything issued, you can keep things, you can keep gold, any gold you had it turned into the government, and except for the older coins. So now I'll just finish with, we're in this country and we're blessed because the dollar is considered the world currency. Everything's done in dollars. And I hope that goes for a long time, but nothing lasts forever. And I don't know whether it's 2 years, 20 years, 200 years away. There's a lot of people trying to wrest the dollar, the value or the currency away from us. One of them is the renminbi. Do you know what the renminbi is, Sam?
I do not.
That is, most people know it as the yuan. This is the official name of the Republic, Communist China's, you know, currency. They'd love to have everything in that. The euro, again, they're trying to replace the dollar, and we always have things like Bitcoin nipping at our heels. So just want to keep in. We're lucky the dollar is the world currency. We want to keep it that way, but you can kind of see how gold hopefully gave you some idea, a little bit about gold. Don't go off and necessarily buy gold because you think you're going to be rich. And people always say, how much should I put all my money? How much can I put in gold? And I like to say, hey, you know, I think you can put up to 5% of your money into physical gold and you're not crazy. If you start putting much more than that, maybe you're watching too much television or listening to too much AM radio. You know, there might be a place for some physical gold, but you know, there's a limit. It's not going to make you rich necessarily. So that's our little bit on gold. I know we're kind of ran a little over. Let's get our drawing.
All right.
And while you're doing that, I'll say we've got Ellen, Brent, Jeff's here, says hi. Mary, good to Charlene, Rick, Brad, Barbara, Rick, and Phil, and Michael said 19, he got the Fed established 1913, that's good. And 1934, FTR took us off the gold standard, and 1871 was the Nixon shock, not the oil. Let's see, Judy, and
did you see, I just put a little comment in there from Michael, a little shout out to Fermental, if you'd like to.
Yeah, one of our last wine winners loved the wine that they chose for them. They went and bought 2 more, the red wine, bought 2 more bottles of it and got another bottle of white. So for those of you who are not familiar, each week we give away 2 bottles of wine, and to be entered into the wine drawing, all you have to do is either RSVP that you're coming to our Facebook event and we'll automatically enter you, or respond to any of our emails throughout the week and say that you want to come to, you know, enter us into the wine drawing. Let us know a future topic that you'd like us to cover. Or also you can forward it to a friend. Let us know. We'll enter you in twice.
Yeah, we love it when you share us with others, you know. So
our winner this week of 2 bottles of wine shipped directly to your door from Fermental Bottle Shop speaking of our winners this week, they entered in every way imaginable, in every way that we offer, and it paid off this week. So our winners this week,
I know who this is then.
you know who you are if you're listening. Ed and Renee. Ed and Renee.
Yay.
So congratulations, Ed and Renee.
Congratulations.
Your name was in here more than a few times, a lot. It paid off. So if you want to win the wine, enter as many ways as possible. It paid off this week. So you are our wine winners. Congratulations. Amy will be in touch and we will get the wine delivered to you.
And it's great. It's
I
great.
was crazy.
It's great seeing you all here for our
48. 48 next week. This is 47. Yeah.
Wait, 57.
47th happy.
Oh my
half
gosh.
hour.
See, it's been a day.
It's been a day. 57.
57.
We'll see you for 58. Our
58
58th
next
happy
week.
half hour next week.
Cheers,
Bye, guys.
everybody. Bye-bye.
Cheers. Thank you.